marked up your demand zone, you marked up your stop loss, you place your target at the correct spot, and then what market comes and does, market comes in, play around your range, and market comes and takes you out. Now you're -1R. What do you do? In this video, we're going over reasons why your supply and demand zones are not working. So the number one reason is order flow. What order flow is the price currently in? In a bullish order flow, bullish zones will be respected, and vice versa for a bearish order flow. So basically for order flow is just what type of market structure is price currently in. So right here we can just see this is just a basic bullish market structure, right? As we can see, bullish zones will be respected to push price higher, and if we're in a bearish market structure, price is showing us bearish sentiment, price will be respecting all the bearish zones right here to continue our bearish movement, price to price down right here. As you can see, all the bullish movements will be respected, and all the bearish movements also will be respected. Boom. So that's the first number one. We have to understand what type of market structure, what type of order flow are we currently in when we're picking our supply zones, right? Because a lot of times right here, right, a lot of people might pick this supply zone right here, but as you can see when you zoom out, right, this supply zone will not hold to push price lower because we were pushing price higher, right, creating higher highs and higher lows. So we can't be looking for this supply zone to hold to push price lower when we are currently in having bullish order flow. So that's the number one thing that we have. So that was the number one, order flow, right? That's the number one reason a lot of people, right, they mess up their supply and demand zones. They're not in line with the correct order flow, right? Because the markets move in a wave type of format, and you're just trying to catch you and you're just trying to place yourself in the correct spot where market may be currently reversing or just continuing at, right? For number two, it is best to trade continuations of trends instead of reversals when in a beginner. Continuations are more confirmed while reversals are more risky. As we can see here, every time price gives us a pullback and then tap into our demand zone, knowing that we are in a bullish order flow, boom, price is looking to push price higher. So it's best as a beginner to trade only the continuations of the trend instead of the reversals. So the reversals, right, you might ask what they may look like, right? So a reversal might look like this. Price may just come in here, take out liquidity, and then give you a market structure shift or a breakup structure, as we said, and then market will just come back down, give you a slight pullback, and then to continue higher. So this is how this move happened right here, this bullish move, as you can see here. This is how it started, right? So the main key to not trade the reversals is just right here, this demand zone right here. A lot of the times, right, a lot of the times will probably get purged in through to probably price gives it another liquidity sweep, boom, or for price to just continue to push lower. So sometimes this is the risky move, as we know. This is what a lot of traders, right, would call the risky trade right here, because you don't know, right? This is like a 50-50 chance, right? That's this move right here will hold. We usually wait for price to give you a breakup structure, and then after that breakup structure, we know that price now will start respecting all the other bullish PD arrays, right? And then we start seeing this upward trend movement where prices just start pushing to the upside correctly. And right here is the same reversals, right? It's going to be a liquidity sweep right here in a breakup structure, and then price will just start respecting every bearish PD array, every bearish zone right here, every bearish supply zone, to then continue price lower. So as a beginner, it's always good to just always trade the continuations of the trends, to just be more in line with order flow, right? So that's number one. We know the correct order flow, and then the correct number two is just to just trade the continuations of the trends and just wait for a breakup structure and just a continuing of the trend, or just once you get better, that's when you get into the reversals. You just start mastering these type of setups. And then for number three is that you are trying to buy at premium or you are trying to sell at discount. So I also released a video on premium and discount zone. So let me just bring it like right here. As you can see here, price is now in a sell format. Price is respecting all the sell PD arrays, but now as you can see, we are now in a discount zone, right? Price may now start using our discount zones, right, our demand zones, to start pushing price higher. But you fail to realize that now we are in a discount zones, but we were moving in a bearish PD array. So now you're probably trying to sell right here to go down here, boom, your trade was probably activated. You were in a sell, but price came back down here, tap into a demand zone right here, a correct one, because now we are in a discount zones, and just like we say in discount, we buy, just like we see right here. Price just comes back up here to now take you out. Your stop loss is right here because you failed to understand the overlying order flow, right? And just to see where price is heading to. So now price is just gonna come up here to come and clear all these old highs right here, because price is going from internal range to external range liquidity. So that's number 3. You are trying to buy at a premium, or you are trying to sell at discount. So right here, you are trying to sell at discount. So now in another scenario is that a trader, right, may be trying to buy at premium, right? So they see that price is pushing price higher. Boom, price is going higher. So they're like, damn, I might get an opportunity to buy up here. So they put their trade right here. Boom. Let me just bring this right here. A trade at this demand zone. Boom. So they're looking for price to push price higher right here. Boom. But not knowing that now we have reached, right, premium zone. So in this premium zone, we know we should sell. So we're gonna see right here. But right here, they're trying to buy to push price higher. But then price just comes up here, tap into this premium zone to then push price higher to take them out. So the trade is right here. And now price push lower to take them out, because now you can't buy at premium and you can't sell at discount. So that's number 3. You are trying to buy at premium, or you are trying to sell at discount. So, and then number 4 is that it was a clear supply or demand zone with no liquidity or fair value gap near it. So once you see like a demand zone, like right here, right, boom, that's just clear, right? There's no liquidity or nothing right above it. Just like right here, you see this sort of liquidity point, right? But if you see a supply and demand zone, let's see right here, boom. But right here, there's no liquidity, no nothing, right? It's just this zone right here. It's just this zone, and then this order block right here. But no liquidity, no fair value gap underneath it. Just expect for it to get taken out, I would say, right? Just expect for it to get taken out, because right here, for a good high probability, high probable supply zone or demand zone to be good, right, you have to have a fair value gap. You have to have a fair value gap, and you have to have a order block, right? Either a fair value gap or a point of liquidity, probably a short-term high right here, boom, or a short-term low, right? Whichever setup that it goes for, right? For it to be a high probable demand zone, right? So, or supply zone. But if it's like a clear order block that me can see, you can see, thousands of other people can see, right? That means that that's like an engineered order block that just plays there for price to just comes in and just clear it and just gives us a stop gun, right? Boom, to come and then push price lower right here. So any clear or visibly clear supply or demand zone with no fair value gap or liquidity near it, that's just right here a horrible supply and demand zone to pick from, and that's one of the reasons you are picking the wrong supply and demand zones. And then the last but not least, is that there you did no higher time frame bias. Without understanding the higher time frames, you really can't do nothing with the lower time frames, because the higher time frames lead us to the correct forms, right? The correct levels, I would say, for us to take our profits and just walk off the charts. So without understanding the correct higher time frame bias, pick our zones from the higher time frames and we scale down to the lower time frames to execute and catch those snapper entries. So now let's hop on the charts just so we can see some correct supply and demand zones on how they should work and how they should look. And now that we're on the charts right here, we're looking at some correct supply zones, and we're looking at some zones that were not correct, right? As we can see here, this main zone right here, this main supply zone, as we can see, it has some of our quality features, right? We're looking for a fair value gap. That's our fair value gap. And then price was playing inside of this big higher time frame range right here. So on the higher time frames, right, since we're on the 15 minutes time frames, on the higher time frames, this whole zone right here is just look like this. Boom, price just come here, liquidity lower, as we see here. So this is our higher time frame schematic, right? But now on the lower time frames, we can see the correct zones and why did price did the movements, right? Like did the big reversals at those correct zones right here. As we see here, it has our key marks underlying into it, right? As we see here, this is a reversal pattern right here. Boom, a reversal pattern. So we already missed out on the risk entry, right? So now we are more in line with structure, and we're now looking to get a continuation entry, right? So as we see here, price already gave us a break of structure of these old lows and a liquidity sweep of all these old highs right here. So a liquidity sweep and a break of structure right here, boom. And then price came in here and give us all these internal range liquidities right here. So price already showed us in correct mode exactly why this supply zone will hold right here, and it's in line with our Fibonacci. Just like I always say, you sell at supply and you buy at discount. So we're just gonna mark it up right here, all the way up here. Okay, OTE, boom. As we see here, price will wick into my 0.709 OTE range. That's aligned with the correct order flow. So now the range is in premium zone, right? The range, right? Everything is aligned correctly, right? I'm in premium zone. I'm trying to sell. That's correct. I have the correct order flow. Price is looking to go lower. I'm getting confirmed lower time frame entries right here. Boom. Break of structure. I have a fair value gap in internal range liquidity, all near my supply zone right here. So when price comes up here, what does it do? One rejection, come back and retest it again, another rejection, right? And now we're trying to go lower now. So this is now a correct supply zone right here. I have multiple confluences that I stated correctly that's aligned with this demand zone right here, with this supply zone right here. So that's number one. You have to understand the correct order flow. As we see here, price was selling, looking to sell, boom. So I have to continue with the momentum of price right here, right? As we see here, I couldn't start buying, right? Because we start seeing this demand zone right here, right? This clean order block. Let's zoom into it. Why didn't this clean order block work? You might say, right? Why didn't this order block work? This one kind of worked, but why didn't this one work, right? As we see here, price was just giving us a liquidity sweep of these old lows, break of structure, and then price came back up and broke this structure right here. Boom. So this right here, this demand zone, price could use it to push price higher, come in, reuse this order block right here. Boom. This clean lowest time frame order block, price can come in back and reuse it. But look right here, this order block, this is the main reason this demand zone failed. This demand zone failed to give price a firm break of structure of these old highs right here. Boom. It failed to give us a firm break of structure. As we see here, this demand zone gave price a firm break of structure of this old supply zone, I would say, right? Let me see right here, break of structure. But now this demand zone did not push price higher to give this right here a firm break of structure. And now because now this demand zone didn't give price a firm break of structure, this old supply right here had to be respected. Now it pushed price lower, and now anybody that was trying to buy right here plays their trade at this old demand zone trying to buy, but now price had turned from being bullish to now wanting to be bearish, right? Boom. You are now on the correct side of the market right here. Boom. You are trying to buy when you should have just been trying to sell. So right here is why this demand zone did not work and why this one worked. Boom. So now for this one right here, as we've seen, price did the same exact thing right here. Price started rallying from this old low to now this old high right here. So this is our range. Rally, base, rally, boom. And then a lot of people, they seen this clean order block right here. Just like I always said, right? This clean order block, liquidity was near it, but they were just inside of the range still. The range was from this low right here to now this high. You're still inside around equilibrium area. So when you're trying to buy still right here, price may just push you down, give you a quick wick, boom, 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 and then rally right back up, right? So that's exactly what happened right here. Liquidity was just getting built. A lot of people probably was thinking that this demand zone would start holding, but price was just building liquidity below and above. So as we've seen here, price just did a quick sweep, boom, clean the stop losses below, and then came and purge right above here to clean the stop loss above. And then we've seen another demand zone right here. Boom, this is just a clean type of reversal demand zone pattern. Just like I always said, these are risky, but we'll just zoom in right here on just so we can just see us some clean continuations, right? Just like I told y'all. So we're just gonna give us a liquidity sweep right here of these old lows, and then we have a breakup structure. Just like I always said, these order blocks right here, if they have a fair value gap, majority of the times, if your order block have a fair value gap near it, and it gave our smart money reversal pattern, it's likely, right, that price will reuse it and just give you a sort of momentum. As we see here, this is our risk entry. We'll just place our trade. Stop us at the low, targeting these old highs, right? Just like I always said, as a beginner, you should be trading the continuations. Now on the 3 minutes, you're just gonna see more type of entries, I would say, right? So as you can see here, let me remove this right here. So once price comes in here and taps into our 5 minute or our 15-minute range, all we're looking for is a breakup structure of the high that purge inside of the range right here, inside of this demand zones. So once we got a breakup structure, boom, we know that all our bullish period arrays now, all our bullish zones will start holding. So we can just take our trade right here. Personally, stop loss always at the low, just so we can give price room to breathe. Stop loss at the low, boom. And where we're targeting these old highs right here, right? So these trades right here, these continuation trades, is just a better for beginners. As you see here, these demand zones have been confirmed, right? This demand zone right here was not really confirmed. Price had to come in here and showed us the pattern once again, liquidity sweep and a breakup structure. So once we see that pattern again happen inside of these demand zones, now we have more trust, right, that price is now wanting to go from bearish to now pushing price to go bullish, I would say, right? So this is just a quick video on how to pick the correct supply or demand zones inside of the Patreon. If you guys want more live content and in-depth content that I don't put out on YouTube, so make sure you check out the Patreon just so you can just learn and become master scalper. Spektrades out.